We're going to take a look at the stock market in just a minute, but first, the December jobs numbers released a short time ago. Let's take a look. Strong, actually. American employers added 292,000 jobs in the month of December. That suggests the U.S. economy may actually buck the global trend and show some growth. The Labor Department says the unemployment rate remained steady at 5% for the third month in a row. More Americans started looking for work and found jobs. The government also said employers added 50,000 more jobs in October, November than previously estimated. Hiring averaged 284,000 a month in the fourth quarter of 2015. That's the best three-month pace in a year. So I want to talk about this in the stock market with David Smith, Managing Director at Rockland Tust. David, first of all, it's a really important day to have you on, so I appreciate you.
Thanks for having me, Brian.
First and foremost, the job number. So we get 3 months in a row of a decent, you can call it a trend now. So what's the takeaway? One, does this mean the economy is doing a little bit better than we thought? And two, does that mean interest rates are going to go higher more quickly?
Yeah, so on its face, for sure, it means the economy is doing well. That's great news. What's interesting in the details is the wage growth is still flat, which means there is no inflation. And that's probably a concern for the Federal Reserve as they consider whether or not to raise interest rates going forward, because they want to see some inflation. That's really what they're looking for. So to put the brakes on the economy a little bit when you don't have that inflationary pressure is probably not what they wanted to have.
Now,
happen.
just for the layperson out there, when you increase rates, it's harder to get inflation, so
yes.
you want to tamp it down when you have it, right?
Correct. Think of interest rate raises as slowing the car down a little bit when you're driving an automobile, and so tapping the brakes a little bit when you don't really have enough speed probably doesn't make sense.
Oh, yeah, let's talk about the stock market, because today's rally already has petered out. We actually went negative for a brief time in the Dow Jones Industrial Average, the worst four-day start in the stock market ever. Now, so 401ks, IRAs, are people getting scared, or what's the tenor in the marketplace right now?
The market is nervous, and it's nervous primarily about what's happening in China. And the reason why we're nervous about China is the growth there clearly is decelerating. The question is by how much. We don't have really good economic statistics or clear economic statistics that come out of China. So you're kind of guessing at what's happening there. We see anecdotes, things like giant cities that are empty. And that's obviously not a good thing long term for any economy.
That affects us. I mean, people have their 401k. Are you getting calls for people to sell? I mean, what's going on in your world?
Yeah, fortunately for us, our clients are well educated about the implications of investing and that you kind of got to stay the course over the long term. But there is certainly concern in the marketplace when you have these kinds of dips. It's natural for people to be concerned. At the end of the day, it's an opportunity to rebalance, focus on your long-term goals, and stay the course.
So finally, just briefly, you do not see this as analogous to what happened in 2008?
I do not. I mean, what happened in 2008 was a financial crisis. The financial system was in jeopardy. Because of the changes in the regulatory environment, the financial system is as strong as it's been in my 25-year career. So I'm not worried about a global financial meltdown. Is China concerned? It certainly is. And the challenge that we have is just how much of a concern should it be. But I don't believe we'll ever have another 2008 in the near term.
All right, right now the market up just 20 points after being up triple digits. Dave Smith from Rockland Trust, really appreciate the time on such an important trading day.
Thanks for having me, Brian.